Veranstaltung. Ich freue mich jetzt, unseren Closing Keynote Speaker or our Closing Fireside Chat guest, or I'm excited to welcome our Closing Fireside Chat. I'm switching back to English. I'm just struggling with my German today. And I'm really excited to welcome Ross Beaty today. And I'm personally really excited because this is the first time Ross and I are chatting. He hasn't been a guest on SF Live or any of the previous SF Online conferences. And I'm not sure he needs a lot of introduction, but I'll try to do it anyway. And
you don't have to.
Yeah, I'm going to leave the years out, how many years you've been in the industry. Yeah. So I'm going to leave that part out. But a very successful mining investor, not a trader, investor. I'd like to emphasize that because you mentioned that a couple times in various interviews because it does make a difference. And you stepped down recently as chairman of Pan American Silver, but you're still the chairman of Equinox Gold, and we're going to talk a bit about Equinox. And I can't even express how appreciative I am that you are joining us and sharing your wealth of knowledge with us today. There is a lot to share and probably a lot to learn too. So you've done a lot of the things right, and maybe we can copy a little bit of that. And really appreciate it, Ross.
Guten Abend, meine Freunde in Deutschland. Und die Rest der Welt.
That's not bad at all, Ross.
Ich habe many years ago I spent a wonderful month in Deidesheim am Weinstraße and die Weinlese.
Nice. That is a very nice area.
And I picked grapes and well, they didn't speak English in the farm at all. So I learned, ein bisschen Deutsch.
Nicht schlecht, Ross.
Sehr schlecht.
Nein, das klingt doch ganz gut. Ganz gut.
Aber heute ich spreche in English.
Yeah, let's switch to English. I'm struggling with my German, and I'm German, and I'm struggling with it. So, Ross, I really appreciate your time again. I said that before, but I think we should dive in. We got lots of knowledge to share and to digest, and I want to dive in with like how you came back to mining. Actually, like you disappeared for a little bit. You focused more on renewable energies. You worked on geothermals, but what brought you back to mining, and when was that exactly?
Well, in 2017, I had built a good-sized renewable energy company. We had operations in geothermal, wind, solar, and hydro, and we were worth about $1 billion or so. And we had an offer we couldn't refuse to combine with a large company in Montreal called Intergex, and they were doing exactly what we were doing, and we combined 1 and 1 has made 3, and the surviving company was Intergex, so I kept all my shares, and I've been on the board ever since. So I was still involved in that business, but I was out of management. And, I was sort of heading towards the exit with Pan American Silver as well. And I thought, well, I didn't really want to retire. I'm a lousy golfer. And I decided to start one last company. And I absolutely love gold. I've always loved gold my whole career. My very first company, Equinox Resources, was a gold mining company with mines in California and Nevada. And I just thought, well, let's go big here. Let's try to build a really big company fast. I was then, and I'm still very bullish on gold. So in 2017, we combined 3 companies together, named it Equinox Gold, began trading right at the start of 2018. And we've been going now for 3.5 years. And all I can say is so far, so good.
Record pace, definitely. Record pace. I have to ask, are you actually here? You are in downtown Vancouver. I think you're just a couple floors below me. You're in the same building. Are you here 700 West Pender? You're at the Equinox office?
We're 625. How? Oh, Equinox is sorry, my personal office is there.
Okay.
Absolutely. Equinox is the same building exactly.
I was going to say, because I bumped into Christian a couple times here in the elevators. So
it's a great, it's a great management team. They really are the guys doing all the hard work. And what I do is try to help the strategy and some of the connections. And it's as I said, it's worked out quite well so far. I'm very happy.
I was going to follow up with that. Yeah, like help with strategy. You mentioned you've been in Nevada and California before. Equinox just bought assets in California and Nevada. And how did you influence that, and how comfortable are you operating in those jurisdictions? And I mean, especially California.
Well, if you ask the question about, comfortable with jurisdictions, it's quite a big question because, these days, to be honest, everywhere is difficult. Every single country in the world is difficult. Mining is getting more difficult. It's more under the lens of ESG, of course, and activist investors and all kinds of NGOs, environmental and otherwise, and it's just a very difficult game. So, to me, it almost doesn't matter where you are. Things could get better tomorrow or could get worse. You just have to be diversified. I think that's the secret. That's what's worked for me. So, Pan American has 11 mines, for example, in I think 5 or 6 countries, from Canada down to Argentina. And now Equinox Gold has 7 mines in 3 countries: Brazil, United States, and Mexico. And we're building another jurisdiction soon. We're building another mine in Canada. And as you see, we do have assets in Nevada. So it's a matter of, the deposit comes first. The value proposition should come first, or maybe second, or in that connection with the quality of the deposit you have. And then where you are isn't as important, because things change very quickly. So today a country might be fabulous, tomorrow it might be terrible, depends on and then the next day it might be great again. So this industry comes and goes, cycles happen, and right now we're actually in a tough cycle because a lot of countries, I mean, just this morning I read that DRC it wants to increase its tax and revenue from mines, and every country seems to have its hand out, wanting more and more and more. Problem, of course, is if they keep asking for more and demanding more, eventually they get nothing, because they kill the goose that lays the golden egg. They destroy the industry, and we've seen that in many places. In my career, I've been in this game a long time now, and I've seen it a lot of times where countries just ask for more and more, or the rules get more and more difficult, and companies say, enough, I'm leaving, I'm going to another place, and I'll invest my money where I'm welcome. But you can't predict the future too well, so you have to be diversified. That was a long answer to a simple question.
No, it's good, because it led me to the next one, because you're also involved in Lumina and Luminex, and I think Ecuador is still a country people are wrapping their head around. It's on the up and up, I think, but it's still not out of the woodwork, I would say.
Yep, very true.
What's your impression on that, and how does that fit in?
Sure. Well, we went to Ecuador back in 2014-15 when it was coming out of being a real pariah, a really negative place to be, very socialist government, huge revenue take, and the result was nobody invested there. And after 10 years, where the revenues from mining fell off a cliff, the government got nothing. Oil and gas industry was the king for a long time, and then oil and gas prices collapsed in 2014. All of a sudden, the government said, what are we doing, ignoring the mining industry? Well, we tried to beat that, and we went there just before that change. We acquired a large land position. We got a hold of a really good project and a lot of other land in different places. And so we started working there in 2015, and it's been pretty successful. And, it's one of those countries that can flop or flip-flop quite quickly. But at this moment, it's, after an election earlier this year, there's a very pro-mining president. There's a great new minister of mines who's just been appointed today, Roberto Salas. And, so far it's had a good trajectory in recent times. And finally, with Fruta del Norte and the Lundin Gold Company, and with a big copper mine called Mirador, run by a Chinese company, finally, the people of the country are realizing the engine of development that a good mine can be. And also all the fear-mongering and crazy talk that was presented by naive or people with agendas, it just wasn't real. So a lot more Ecuadorians understand the wealth that can come from mines, properly run, I should say. There's a lot of bad mining in Ecuador, and this is one of the problems. A lot of historical mining in Ecuador has been these small, sort of artisanal operations, which are lawless. They're heavily polluting with mercury and cyanide. They're absolutely destructive to social communities. And a lot of people in Ecuador equate large, or you could say modern mining with modern companies, with that very destructive artisanal mining. And we have to show them with good track records that that's not true anymore. And that's what Lundin is doing, and I think Mirador is doing, and I think that's what we want to do, because properly done, a good mine can be a tremendously positive thing for a region, for communities, for governments, for everybody, if it's well done.
Yeah. I want to come back to the ESG topic, because I think it's a big one, because you also had a speaker this morning on. It was a bit controversial, because she was against the gold theory, or our gold thesis here at the Goldmesse, which was good, but she was coming from it from an ESG angle, and that overall taintedness of that like the mining aspect. So I want to come back to that because you mentioned a couple of points she mentioned as well. But I want to stay on the region real quick as well, because you mentioned Ecuador. They finally figured it out. They seem to be mining is healthy for the economy. Peru and like Chile to the other degree are going the other way right now, especially Peru.
For sure. Yeah, they're both.
Are you worried that this is catching on more? Like, people said, oh, socialist tendencies worldwide. Is that a trend you're witnessing?
Right. It is definitely a trend right now. And it's funny how the world works. It's almost like sunspot cycles. You know, we go through these weird cycles where the whole world seems to be synchronously trying to take more and more and more and regulate more and more. And basically, you know, it's very difficult and damaging actually to the private sector to be in this environment. And you said it correctly. Chile is doing it right now. It's unbelievable what I'm seeing there. It's not restricted to South America, by the way. There's plenty of other places in the world, and let's not mention the stands and Russia and so on. But it's worrisome for sure. But at the same time, you know, I have had this sort of long history in this business, and I've seen things get better very quickly as well. So you could take Peru as the best example that I know. Peru was a basket case back in 1992. I mean, the place was a mess. Huge inflation, no currency control, terrorism, all sorts of chaos. And then, bingo, a new government, a big broom that swept through the corruption. And for literally 30 years, it's been the best country to work in Latin America. It's possible that could change, but you know, I'm going to bet that it won't. I think that's one place. Yes, there are problems for sure with mining, particularly with communities that don't see the benefits of mining. You just have to work on that and fix that. But I think, generally speaking, a lot of people in Peru know the value of from a well-run mining industry, and they're going to want to support it against this sort of crazy far left rhetoric that one of the presidential candidates is talking about right now. Yeah. You know, and even if they're elected, they have election cycles, 3-4 years maybe, and then they get you know, there's another change. So you have to kind of have that long-term view and hold your nose, just wait, and not get too excited by the rhetoric, and especially by the short-term thinkers that seem to afflict the world today, where everybody has an opinion, everybody's got instantaneous communication. We all know what's going on all the time. And, you know, you can literally lose the forest for the trees. If you get too deep into the weeds with all this news, you get worried and fussed and anxious. And stop, turn off your phone, think long term. The world needs mines more than ever now. Good mining works well with communities, and that's where I think you should think about in terms of supporting these companies. But be diversified.
I think that's a good note to end, and we're done. No, no, I think that's a great comment, actually, and I think COVID has pushed us, or has pushed the news cycle even has made it even faster. It feels like I'm constantly on Twitter looking for news. I think it's much faster now as well. Yeah. I want to come back to the markets, because we talked about like tax increases, and I think it's a direct result of higher commodity prices. And when we were talking about Equinox, you said, well, we're still in a tough market. So my question is now, A, what kind of market are we in? Define that tough market environment for us a little bit. And then B, as a follow-up, coming back to Equinox, how is that making your job tougher or easier acquiring new projects?
Yeah, I mean, when I said tough, I meant really the industry is a difficult industry. It's high risk. It's a very high risk business. A lot of geological risk and mining risk and metallurgical risk and social risk, political risk, and timing risk, where you have these cycles that happen. And you know, we live through these cycles. So in high commodity price times like we have right now, companies are actually doing pretty well. They're making lots of money. That offsets the fact that when the commodity price collapses, they make no money, or they lose a ton of money, and the only way they can survive is by living off the fat they made in the good times. Well, of course, governments don't seem to understand this. They want to gore they want to gore the bull when times are good, but they don't want to make the allowances and incentives for companies to stay alive when prices are no good. So it's that's the world we live in. It's been like that for a long time. And somehow countries that get it right, I'm going to say Canada, Australia, many countries that have a thriving mining industries that get it right and do understand these things. They don't try to stick pins in companies when prices are high that will reduce investment, reduce companies thinking long term, in favor of supporting them in tough times. They just let companies make good money, pay high income taxes when prices are good, and then when prices are low, they have to live through that with the retained earnings they've made in the good times. Today, things are pretty good, but the other thing that governments rarely look at, and often shareholders don't either, unfortunately, is they look at the revenue side, but they forget about the cost side. So the revenue side, of course, metal prices are good, revenue goes bananas. They forget that typically when you have high metal prices, you have higher inflation, you have higher cost pressures, you have weaker US dollar, therefore higher local currencies, higher labor costs, and just so on and so on, meaning that the actual costs of production go up, not maybe at the same pace as the revenues go up, but definitely they go up. And you see this cost creep always in a bull cycle like we're in right now. Again, governments tend to forget this, and they do the worst possible type of taxation. They apply higher royalties, which come right off the top line. It's unfair, it's unreasonable, it's completely inconsistent with long-term thinking. But as I say, it's the world we live in.
It is, unfortunately. And you mentioned a couple of points. Inflation. I talked to Keith Neumeyer about that yesterday as well, because I noticed his costs crept up a little bit on a per ounce basis. Sure. Let's get back to Equinox there. Do you see that already? Do you see some wage pressure, obviously, but do you see input costs increase as well? Do you see inflation creeping in?
Equinox is a tough example because it's such a young company. We have so much built-in growth going on right now. We started 2018, our first year, we produced 25,000 ounces. 2019 was like 140 or something like that. And last year we produced 400,000 or so. And this year we're going to be 650 or something like that. And next year 800, then we'll blow through 1 million ounces in a couple of years. So we're just so busy building new mines and expanding mines and acquiring mines. I mean, it's just been such a rapid trajectory of growth. And the reason for the growth, by the way, is just because the bigger you are, the more you benefit from these rising gold prices. It's really, really simple. The bigger you are, the more you benefit from higher gold prices, number one. The more you benefit from the shareholders who want scale, want liquidity, want big as opposed to small. And that's really the market we're building this company specifically to focus inside. And so, if you look at quarter to quarter, you can often get a very mistaken impression of where the company is going to be in a year or so. And investors should invest for a year or 2 or 3 years in this business, not from quarter to quarter, because quarters have violent swings of costs, violent swings of revenue, for all the reasons having to do with how mines work and how they operate and how metal sales are made and so on. So there's lots of little short-term things that can screw up results. But if you look at the long-term trend, even medium-term, a year, 2 years, I don't think there's a company that has certainly in the gold business, that has a better growth profile than Equinox. And with the more growth, what happens is you tend to reduce your costs because you have more ounces against lower overhead per ounce, thus bringing your total costs down. And that's the name of the game with Equinox. We're going to try to become a really big global gold company. And like I said, so far, so good.
Yeah, you're definitely a growth company in a value-oriented sector.
Huge.
So
yep.
There's a big divergence there usually because the big majors, they're not doing much right now. And we've been having that discussion a couple of times. And right now is the time to grow because capital is almost free.
Yeah, the other thing that's happened to the big guys, and we often forget this, mining is not a static business. Mining is a non-renewable business. Every single day, mining companies eat their future. They lose reserves. The only way to stay static or grow is by either exploring and discovering new reserves or by buying reserves through M&A. And that's why in this game, if these big companies, and they have been, you're correct, Kai, they've been talking about, well, we're going to harvest our operations, we're going to consolidate, we're going to reduce costs, we're going to do all that, but we're not going to grow. And that was because investors gave them hell for stupid growth back in 2011 and 2012 when they did all kinds of boneheaded deals. And today, after sort of 5 or 6 years of that practice, a lot of the big companies are actually losing reserves, not increasing, they're decreasing reserves. And they absolutely will have a wake-up call soon because you cannot be Barrick producing or Newmont producing 5 million ounces a year without replacing those reserves. And it's tough. So they will have to eventually, and not too far away, start buying the really high quality developers like Lumina Gold, for example, and doing sort of joint ventures with companies that have big land packages like Luminex, those sort of companies. And so I see a pretty good future for development stage companies, many of which have been at this show of yours.
No, when we've seen that as well. Like I kept saying on a Kitco interview recently, like the miners always do the wrong thing at the wrong time, right? So they should be raising debt right now instead of getting rid of debt in their balance sheet.
Like Swiss investors.
Well, there you go. But at least they're investors. They wait usually. They're a bit patient, so which is good. I was going to follow up with something else. We were talking value and growth, and like where do you think Equinox is headed? So you got 7 operating mines. Like what's the end goal? 11? Like you had with Pan American?
No. There's no number. I mean, in fact, we'll probably end up reducing our number of 1 or 2 more mines. We just sold a mine a month ago. No, it's not number of mines. Of course not. It's quality of mines. So we're always going to be trying to improve the quality of our portfolio. I like diversification, so it's always going to be more than one. And typically, in 4 countries, it's a very good thing not just to be geographically diversified, but it's also good to be diversified in terms of even where you are in a country or the kind of mine you have in a country. So we're looking for long-term, large gold producers with good exploration upside. Those are the ones we're going to keep. And we have a handful of those in the company already, and there's 1 or 2 that don't quite qualify. If we go do anything more, and believe me, we're not looking for more deals at this moment. We have quite enough internal growth right now. We're going to more than double our production from 600,000 ounces to well over 1 million ounces with internal assets we have right now. If we do anything else, it will be a search for higher quality, and it'll be opportunistic. It won't be by attempt or by design, I should say.
Perfect. Ross, the industry knows you're also investing personally into companies. Like, what are you looking for in terms of characteristics? Like, are you looking for those takeover targets? Are you looking for drill plays? Give us some idea.
Sure. Well, at the outset of this interview, you said I prefer to call myself an investor. I actually prefer to call myself a developer. So most of my life has been, whether it's renewable energy or mining, it's been taking operating companies and building them into bigger operating companies. Pan American was that, Equinox Resources, my first company, my clean energy company, Altera, and now Equinox Gold. Those are things that I love. But in the meantime, there's been probably 9 or 10 or 11, I think, other companies that I've founded that have been true exploration, add value, sell. And we've done that very well. But again, that's in the development mode of working very hard on the assets of those companies. It's true for a while, I moved into more pure investing. I bought big stakes in companies like Ventana, Augusta, Arizona Mining, all kinds of these sort of companies, Kaminak, and they all had pretty happy endings. I mean, I could reel off a bunch of them. They were all companies that did fit a sort of a box of good deposits that were in the exploration development phase, likely to be bought by a major company. And in every one of those examples I gave, that's exactly what happened. The one just a month ago or so, I've held for 3 or 4 years as an investment was GT Gold. I was a big shareholder of that. Newmont came along and made everybody happy. And those are companies, where you only have to sell once. So typically I try to find companies that I can take a meaty position and forget about, knowing they're run well, they're good deposits, likely to be bought out by a major company. No guarantees. Sometimes you make a mistake, but it's certainly been more successful than not for me. And if I was to be an investor again, which I'm really not right now, I'm not buying new deals right now, that's the kind of company I'd look for.
And I got to drill down on that commodity specific, gold focused, copper focused, silver. Any
good question. I mean, I could run through the whole periodic table right now with things I like and don't like, but sure, I love gold. Gold's got great legs. I wouldn't be the least bit surprised to see it blow through the last high and later this year. I just think it's got great legs. I love silver, even more sometimes than gold, which is saying a lot because I really think gold's a great commodity, has great legs right now. Beyond the precious metals, I think copper, of course. Copper is a core metal for the new age in every way. It's an electricity metal, and the world's going electrical. So clearly copper has a wonderful future. I haven't been too keen on things like lithium or cobalt, because cobalt's too small a market to be significant. Companies will build batteries without cobalt. There's just not enough in the world. And lithium, there's tons of in the world. So it's great, lots of batteries, but the price won't go up much, I don't think, because there's just so much supply. I could just keep going on, but I'm not wild about uranium, not because I don't like nuclear power, but because I just think, it's so expensive, and it's being blown out of the water by the cost for solar and renewable energy generally, solar, hydro, wind, coupled with batteries or coupled with other types of storage. It's including hydrogen. So some metals are good for one reason, some are good for another reason, and that's how it works.
Okay. No, perfect. I appreciate that insight on uranium as well, so I don't have to follow up on that. But I do want to come back to ESG. It's hugely important. It's growing in importance. Yep. You recently gave a good conversation, or you had a fireside chat at Roundup recently, I think January, so felt like yesterday. Yeah. But ESG, and we had that discussion, I mentioned that earlier with a keynote speaker, it is top of mind. It is something yep. investors demand more and more. And, yep. and how do you determine that? And I'm specifically looking at the junior end of the market, so Equinox and smaller.
Yeah.
Right. So for me, I'm struggling with that and you know that as well. There are lots of companies, even in this building, with 3 people employed. Right. So how do you make it work, and how do you fulfill the requirements, and how do you look for ESG principles being fulfilled?
Well, let me just first say, it's so great that ESG is being focused on so much right now. It's just wonderful. It's not new particularly. It used to be called CSR. It used to be called social license. It used to be called doing the right thing. And every responsible company has always tried to do it. But today, every single company is now required to do it, because investors are demanding it, banks are demanding it, communities are demanding it, everybody's demanding it, and it's absolutely the right thing to do. We have to mine safer. We have to mine with far more attention to our environment and a lot of attention to our local communities, not to mention local countries. So it's super important. And then let's not forget to mention the diversity side and the equality side and all that stuff. So, it's a big subject, and it takes a lot of resources. So it's a fair question. How can a 3-person company absolutely, understand and get involved in this? Well, the truth is, a 3-person company, Kai, doesn't have the impact that Equinox now has, I think, 65 or 100 or 7,000 employees. And we operate with communities around our mines that are probably 100,000 people that rely on what we do for a good, healthy living. So, we have a very large impact compared to a little 3-person company running a drill program up in the middle of nowhere in Nunavut or in anywhere. And so you've got to match the ESG reality with the on the ground reality, and you can't be all things to all people. You can't expect to have a tiny exploration company follow the same principles and have the same horsepower of people on those subjects. It's not a concern. The guys, every single person in every single company has to think about it, has to recognize it's important, and has to execute as well as they possibly can. That's all. And if everybody does that, guess what's going to happen? We're going to have a much better industry with a lot better track record and a lot better public reputation. We don't have to talk the talk. We have to walk the talk, execute, live it. It's tough sometimes, we've had so much, it's in this day and age where, every person that has an agenda has a communication platform through social media, and they can say whatever they want, whether they're lies, whether they're distortions, absolute garbage. They can put up, and shareholders either, when they read it, because everybody can read it, everything's instantaneous now. They have to think, is this true? What about the other side? Is there a true story here? Equinox, a couple of months ago, there's a huge rain event at one of our mines in Brazil. I think it rained, it rained 450 millimeters in one day. That's a lot of rain. And a pond that had been built by a bunch of garimpos overflowed, and it instantly people took pictures, and all of a sudden they said, tailings dam failure, all this was up on the web. There was no tailings dam failure whatsoever. In fact, on the contrary, our tailings dam was strong and robust and held up, and we helped the local community clean up their water, build a better water treatment plant, provide drinking water. But the total lies online were broadcast all over the world, and you can imagine all the flack we got from these naive people. So it's the world we live in, and you have to recognize this is the reality, kind of let it wash over your shoulders. As long as you know you're doing the right thing, you can sleep at night and you can wake up in the morning really trying to build a better world. And every person in our industry has the obligation to do that and the capacity to do that in their own way.
No,
that was another long answer.
No, you're speaking from my heart, because it exactly reflects what I'm thinking as well. Like forcing sustainability reports on three-man companies, for example, it just does not work.
It's crazy.
But investors can vote with their wallet, so that's important as well, and they'll find out rather quickly as well if they ask the right questions. So, Ross, like, before we wrap up here, and it's been, I can't believe it's already been half an hour, just unbelievable. We have one question from the audience, actually, and I was supposed to ask you about your newest company, Strategic Resources.
Oh, that's not my company. That's a company that has been put together and is being run by the guys who run the Lumina Group. Who run Lumina Gold and Luminex and Strategic. So I'm involved as a shareholder of that, but I'm actually not really involved in management. And I'm wishing them well. They're smart guys. I'm sure they're going to create wealth. But I'm sorry to say I can't really provide too much comment on Strategic.
Okay, it was just a question we had from the audience. I figured I'd throw that in.
Yeah.
But Ross, like, it's been phenomenal speaking to you. Really a pleasure. It's great. Like, I was a bit nervous. I was a bit starstruck as well, I have to admit. So at least I didn't stutter. But I do appreciate you coming on and giving us 30 minutes.
Thank you very much. It's you know, I have to say, Kai, I really like doing these things because, you know, your listeners are people who have supported me and the kind of people who have supported my companies for, well, now it's been 36 years in running public companies. And even though my latest company is Equinox Gold, you know, I have to say you cannot build these kind of companies without the whole ecosystem of support. You need good shareholders. You need good employees. You need, you know, good properties. You need luck with the commodity cycle. You know, even a genius can't make money if gold collapses through the floor, or if you get unlucky with a drill hole. So I just thank the whole audience for what they're doing to support our ecosystem. Nobody can be successful. An entrepreneur like me cannot be successful unless we have supportive shareholders and investors. So it's my thanks to you and all of your team, and doing these kind of things online are great, because good investors are well-informed investors, and this is how you get informed.
Perfect. Ross, thank you so much. Really appreciate it. Thank you. And can't wait to catch up with you soon, and maybe have you on as a guest for SF Live, one of our live interview formats. So thank you so much, and appreciate it, Ross.
Okay. Thank you. Bye-bye now.